Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Autonation Inc. Annual Report. Autonation Inc. offers a diverse range of automotive products and services through its various subsidiaries. The company operates four main segments: domestic, import, premium luxury, and Autonation Finance. In terms of products, Autonation provides new and used vehicles, as well as parts and services such as automotive repair and maintenance. The company also offers wholesale parts and collision services, which cater to both retail customers and other businesses in the industry. Additionally, Autonation provides automotive finance and insurance products, including vehicle services and protection products. These financial services enable customers to purchase or lease vehicles through various financing options. In terms of business operations, Autonation owns and operates new vehicle franchises located in metropolitan markets across the Sunbelt region. The company also manages a network of collision centers, used vehicle stores, automotive auction operations, and parts distribution centers under its brand name. These diverse services make Autonation a comprehensive player in the U.S. automotive retail market. The recent surge in Autonation Inc.'s stock price can be attributed to the company's impressive financial performance in 2025. One of the key drivers of this increase was the stronger-than-expected adjusted earnings per share, EPS, of $5.08 for the fourth quarter of 2025, surpassing analyst estimates. Autonation's record-breaking, adjusted free cash flow of over $1.05 billion for the full year 2025 also contributed to the stock price rise. This significant increase marked a 39% jump from the previous year, demonstrating the company's financial health and stability. Furthermore, Autonation's share repurchase program allocated $785 million in 2025, reducing the weighted average shares outstanding by 8.7%. The company's Autonation Finance division achieved profitability for the first time in 2025, generating a profit of $10 million, a substantial improvement from a $9 million loss in 2024. Additionally, its finance portfolio doubled to $2.21 billion. The after-sales segment also delivered record results, showcasing growth in revenue and strong gross profit margins. The positive impact of these financial achievements was further amplified by analyst price target revisions following the earnings announcement. Several analysts raised their price targets for Autonation, including Stephens & Co. and Wells Fargo, which increased their targets from $228 to $232 and $222 to $230, respectively. These developments collectively contributed to the 6.19% increase in Autonation's stock price on February 6, 2026. Autonation Inc. maintains a market capitalization of $7 billion, broadly in line with the industry peer group. Autonation Inc. trades at a lower price-to-earnings ratio of 12 times and a higher price-to-book ratio of 3.03 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company exhibits a very high leverage profile, with liabilities accounting for 81% of total assets. This elevated debt level warrants heightened caution, as it may limit the company's financial flexibility and increase risk during economic stress. We have to further examine the industry and the nature of the business to determine if they justify the current valuation. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has aggressively reduced its share count despite weak revenue growth. This raises concerns about whether buybacks are being used to offset underlying business challenges. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline at Autonation can be attributed to several key factors. On the growth side, new vehicle sales, used vehicle sales, and parts and service revenue are significant contributors. These segments have consistently shown an upward trend in recent years, driven by increasing demand for vehicles and related services. On the other hand, finance and insurance, net, has been a major driver of revenue decline. This segment has experienced a downturn due to various market and economic factors, including changes in consumer behavior and regulatory requirements. In addition to these drivers, long-term revenue growth rate is projected at 2%, which is a moderate pace compared to previous years. Franchise rights have remained stable, valued at $42.7 million, while CDK outage insurance recoveries have provided a one-time boost of $80 million in Q3 and Q4 2025. Overall, Autonation's revenue growth or decline is influenced by a combination of industry trends, market conditions, company-specific factors, and regulatory requirements. By understanding these drivers, the company can make informed decisions to mitigate risks and capitalize on opportunities for growth. Net income experienced a significant decline between 2023 and 2025, with a drop of $372.1 million, or 36.4%. This decrease was largely attributed to non-cash goodwill and asset impairments, which reduced net income by $136.1 million in 2025. Additionally, the company faced a decrease in gross profit margin due to higher average interest rates and lower floorplan interest expense. The decline in net income was also reflected in the company's profit margins. The consolidated operating margin decreased from -0.7% in 2023 to -5% in 2025, indicating a significant deterioration in profitability. Operating income margin also declined from 4.9% in 2024 to 4.5% in 2025. However, the company did experience an increase in same-store retail used vehicle revenue due to higher average selling prices and a mix shift to higher-priced vehicles. This was partially offset by a decrease in wholesale used vehicle revenue due to a mix shift to lower-value vehicles and decreased unit volume. Insurance recoveries received under cybersecurity policies also contributed to the decline in net income, but to a lesser extent. Overall, the decline in net income and profit margins can be attributed to a combination of factors, including non-cash goodwill and asset impairments, higher average interest rates, and changes in revenue mix. The company's financial performance in 2025 indicates a positive trend in operating cash flow. According to the provided information, the net cash provided by operating activities for 2025 is $111,900,000. This significant amount suggests that the company is generating substantial revenue from its core operations. Furthermore, other indicators also point towards a healthy operating cash flow. The company's auto loans receivable, net, which is a key component of its financial performance, stands at $2,140.2 million in 2025. Additionally, the company's overall cash position is strong, with a total of $85.8 million available for use. The confirmation from page 43 that the company is indeed generating positive operating cash flow in 2025, with an amount of $9.8 million, further reinforces this conclusion. Overall, these figures collectively demonstrate that the company is successfully managing its finances and generating sufficient cash to support its operations. The company's debt level and interest expenses have undergone significant changes over the past year. One notable trend is the decrease in floorplan interest expense, which has been reported to have decreased by $30.1 million, minus 13.7%, from 2024 to 2025, across multiple sections of the report. This suggests that the company's ability to manage its debt and reduce interest expenses has improved. In terms of debt levels, long-term debt has increased significantly, rising by $1,091,200,000 from 2024 to 2025, page 48. Additionally, total debt has increased by $1.3 billion from 2024 to 2025, page 52, and non-recourse debt has increased by 137% over the same period, page 49. However, it's worth noting that interest expenses have decreased in some cases, such as a decrease of $100 million from 2024 to 2025, page 52. The interest coverage ratio has also improved significantly, increasing from 3.00x in 2024 to 4.83x in 2025, page 50. Overall, while the extent of changes varies across different sections of the report, it is clear that the company's debt level and interest expenses have undergone significant changes over the past year. Management is optimistic about the company's future prospects, driven by a diversification strategy that aims to expand revenue streams through various automotive products and services. The growth of Autonation Finance business is also a key focus area, with plans to increase finance penetration rates and expand store count through strategic acquisitions. To achieve these goals, management has outlined a capital allocation strategy centered on investing in long-term value creation initiatives, share repurchases, and opportunistic investments. A disciplined approach to debt management will ensure that the company maintains a healthy balance sheet, while also addressing risks associated with indirect lending and cybersecurity threats. In addition, management is committed to adapting to changing economic conditions, including fluctuations in fuel prices, interest rates, and consumer confidence. By investing in strategic initiatives and maintaining a strong retail brand reputation, the company aims to navigate these challenges and drive long-term growth. Overall, management's strategy is focused on creating sustainable value for shareholders while navigating the complexities of an evolving market landscape. Acquisitions and divestitures are significant business transactions that can impact a company's growth, profitability, and market position. In the context of the given summaries, we can identify several key acquisitions and divestitures. The company has made various acquisitions to expand its operations and increase its market share. These include acquiring used vehicles from customers through trade-ins and auctions, as well as purchasing new vehicles for its new vehicle departments. Additionally, the company acquired 5 stores in 2025 for $459.1 million, which is expected to enhance its presence in the market. The company has also made significant divestitures, selling 2 stores in 2025 for $16.1 million and 8 stores in 2024 for $156 million. These transactions are likely aimed at optimizing the company's portfolio and focusing on more profitable operations. Furthermore, the company has repaid an outstanding balance of $700 million through Autonation Finance Trust 2025-1, which is a non-recourse note payable. This transaction demonstrates the company's ability to manage its debt and financial obligations effectively. Overall, these acquisitions and divestitures reflect the company's strategic efforts to grow its business, optimize its operations, and manage its finances efficiently. The company's financial activities have been documented in various sections of the report. One notable aspect is its dividend policy. According to the information provided on page 24, the company has not paid any dividends to its shareholders. On the other hand, the company has engaged in share buybacks. This activity is mentioned across multiple pages, including page 104 and page 105. The decision to repurchase shares suggests that the company is confident in its future prospects and believes that buying back shares will benefit its investors. That concludes the financial summary for Autonation Inc. Feel free to comment below, and I will be happy to answer them when possible.